Hello, this is Peggy here with Stephen Kamel, owner of Exellion Group, an insurance agency specializing in commercial trucking. Today we're going to answer a few questions concerning your insurance needs and how we can better serve you. Stephen.
Thank you, Peggy.
Let's start with, Stephen, what is auto liability coverage?
Well, thank you for your question. Auto liability is the primary coverage that is needed for every commercial trucking operation out there. As the name suggests, it's liability that covers an auto. And when you're looking at auto liability coverage, there are two types of considerations when covering a vehicle for auto liability. One, you have to consider whether that vehicle is being used in-state, which will mean that it's an intrastate type of coverage, or whether that vehicle goes both in and out of state, like the big commercial trucks, the big 18-wheeler rigs. And so those are regulated by the FMCSA, the Federal Motor Carrier Safety Association, and they also require a specific amount of coverage that is mandated by the federal government. For example, the federal government says that for every vehicle that is doing interstate commerce, for big 18-wheelers, they need 750,000. I know many people think that $1 million is what is required, but it's actually 750,000. The people who require the $1 million coverage is the brokers. Box trucks or straight trucks are mandated to have 750,000 worth of coverage. This is coverage in case they hit somebody else. The government, the Federal Motor Carrier Safety Association, demands that they have 750, and cargo vans doing interstate commerce, having their own authority, ought to have 300,000 for them to be compliant with the federal government requirements. The requirements for in-state or intrastate are a little bit different. The limits are not that high, which we will discuss in another video. But basically what auto liability is the liability coverage that is needed by a motor carrier for their operations on a public roadway, and they have to have the mandated amounts. So that's it in a nutshell.
Oh, I see. Thank you.
You're welcome.
And what is physical damage coverage?
Well, physical damage coverage is coverage that covers the vehicle. The equivalent for physical damage on a commercial motor vehicle is the comp and collision that goes on a small vehicle, a personal vehicle, or you will call it full coverage. Basically, that covers a vehicle in the event of that vehicle having an accident or being involved with a fire, any peril, anything that can happen to a commercial motor vehicle. A fire, theft, vandalism. Here at Exellion Group, we've had people call in and give claims that somebody got into the truck and removed the gearbox. There have been accidents, freak accidents on the road, whereby some truckers have hit snow and the vehicle ended up in a ditch. So basically anything that can affect that motor vehicle, the physical perimeter of that motor vehicle, or rather the four walls of that motor vehicle, we cover the physical aspect of the vehicle, which is the physical damage. And so usually how that is rated is that it's rated by the amount or the value of the vehicle. So if you have a truck that's worth 20,000, then the coverage is 20,000. If somebody else has a vehicle that's worth 50,000 in coverage, then that's what the vehicle will be covered for. You're covering your own unit, you're covering your own vehicle for the amount that vehicle was purchased for, and that vehicle can be covered with the actual cash value, or the RCV, which is another method of calculating the value of a vehicle, but it is covering the vehicle for any damage or any act that can take an insured towards a loss for their own unit. So that's what it is in a nutshell.
Wow, good examples. What is cargo insurance coverage?
Well, as cargo, the name suggests, cargo is coverage that covers the cargo that a trucker is transporting or hauling intrastate. And cargo, usually the aggregate limits are 100,000. That's just the typical cargo policy. Some cargo policies exceed the average limits, or the limits that the FMCSA requires. Some go to 150, 250,000, and those are special cargo limits. Those are the exception and not the norm. The reason why I say that is because things or cargo such as motor vehicles, whenever you see a big truck hauling motor vehicles, most of those trucks are 30,000. I mean, most of the vehicles are 30,000 in worth. And so you can imagine hauling about 8 or 9 of them, you easily exceed the 100,000. So 100,000 is the standard, but there can be instances where that cargo exceeds 100,000. For example, this is Texas, an oil hauling state. And when we're in Texas, you do know that oil is hauled all over the state. And so that coverage would easily exceed 100,000. And so there are some things that exceed the 100,000 cargo limits. But the typical amount is 100,000 to cover what is being hauled on the back of the truck.
Okay. So then, what is non-trucking liability?
Non-trucking liability, commonly referred to bobtail, bobtail insurance, covers when the power unit, the head, the tractor is not pulling anything, is not pulling a trailer at the back. And so non-trucking liability covers for the when a truck is empty, and by empty I mean when it's not attached to the power unit, or rather not attached to the trailer, and that can have limits for up to $1 million. It also covers when somebody is deadheading, meaning that the trailer is attached but the trailer is empty. A trucker might be in Oklahoma City, and decide, hey, I'm going to spend the night with my family in Texas. It's Friday evening. I haven't found a load. I'm not going to sit here and wait to get a load before I go down to Texas. And so when they are deadheading, that non-trucking liability would apply, meaning that they are not hauling anything, or they are not on assignment from the company that they are leased onto. However, they are still on a public motorway, or they're still on a public roadway. And what that means is that in case they have an accident, then the company that they're hauling for will not be liable, because they have not asked them to move from one state to the other, or move from where they were last stationed. Another good example is if the truck is going in for repairs, they're still using a public motor roadway, and they will need coverage. That is not necessarily on company time. However, it is mandated that every vehicle that is on the road should have some sort of liability coverage to cover the acts that they may cause to another road user. And so non-trucking liability, commonly referred to bobtail, is insurance that covers a vehicle when it's not on assignment and not loaded, i.e. deadheading, or when it's not attached to the trailer. Yes.
Okay, well, we had covered auto liability coverage. What is general liability coverage?
Now, general liability coverage is coverage that covers the acts of a motor carrier when they are in a dock or in a warehouse. When they arrive to where they are going to, there are still operations that need to happen. For example, that truck might need to be unloaded. It might need to be loaded. When the truck is being unloaded, the items being delivered or the goods being delivered can fall onto the driver. They can fall onto the people who are unloading, the dock workers, and so anything that can happen in the times when the truck is being loaded and unloaded will not be covered by any of the auto liability coverages. It will not be covered by a physical damage coverage. That means that it has to be covered by a general liability coverage, meaning that if anything happens in the course of the operations at the dock, then that will need to be covered by the general liability policy. Typical limits for commercial general liability policy are 100, or some companies require for a trucker to have 2 million. Sorry, did I say 100? I meant a million or 2 million aggregate. And there are various things that it covers: medical payments to others. As the name suggests, it's a liability coverage. It even goes as far as covering advertising liability. Covering things like slander, advertising injury. So it does cover a lot. General liability. Yes.
Okay, will be our last question here for this recording. What is workers' compensation?
Workers' compensation insurance typically is insurance that covers the worker when they are carrying out the operations of a motor carrier. So you are on the job and you're injured on the job. Your employer is required to compensate you for any accidents that occur when you are working. Typically, workers' comp is basically anything that can happen when the employee is working as mandated by or as required by their insurance. As long as they are injured on the job, then the employer is required to have workers' comp insurance, and that applies to trucking coverages. So that's what workers' comp is in a nutshell.
Okay, well, thank you, Stephen, for answering our questions today. If there are any questions anyone else has, we appreciate your call and be more than happy to answer those questions.
Wonderful, wonderful. Well, in case somebody's wanting further clarification or wanting to know more, they can reach out to us here at Exellion Group Insurance Agency. We are at 9330 LBJ Freeway here in Dallas, Texas. Our zip code is 75243. You can call us at 469-671-6672 or 469-671-7552. We also have a toll-free number, 1-866-855-5505. You can catch us on our website, www.exelliongroup.com. Exellion is spelled EXELLION, group.com. We're on social media, Facebook. Anywhere you want to find us, you'll get us. We are very visible. So feel free to call us. And if you need further clarification about trucking insurance, we will be more than glad to provide that information to you. Thank you so much for your time.